Where does Bitcoin success fundamentally come from? Why did Bitcoin get that much adoption over time? Of course, there are these properties of Bitcoin, right? It's highly divisible and it's not owned by anybody. And it's like the decentralized money, and there has been a lot of marketing around it. But why was Bitcoin so successful? Why not anything else? Why is there so much appeal towards Bitcoin? Is Bitcoin replacing gold? Is Bitcoin replacing tech stock investments? Where is all the capital coming from? I think there is a case to be made that gold actually does replace gold to a degree. And that's because there's very little correlation between the Bitcoin price movements and, say, the stock market price movements. So people buy gold because they don't want to be exposed to the ups and downs of the gold market, and they still want to have something safe on the side. But if you're managing a portfolio, you can buy pretty much anything that has low correlation to the stock market. Now, if you've got an asset that tends to appreciate over time because of its limited supply, and that it also has very little correlation to the stock market, you've got an ideal portfolio diversifier. And that's, I think, a reason why a lot of people bought into Bitcoin. It was simply because of the low correlation to stocks, which, by the way, is still existent today. A lot of people think that when the stock market crashes, that Bitcoin has to crash as well, and vice versa. It's actually not true. If you run the numbers, if you run the correlation numbers, we still have super low correlation between Bitcoin and the stock market. It's not zero, but it's very, very low. It's almost as low as gold's correlation to the stock market. So it's still a very nice diversifier. And that, I believe, is one reason why Bitcoin could take that much capital, and why potentially also gold did not perform that well in the last 10 years, right? Recently it's doing fine again, but in those years before that, right, when Bitcoin really had a run, gold didn't do much. And I think partially this was capital that was supposed to get into gold that got then, at least to a degree, into Bitcoin. There's another parallel of gold to Bitcoin. Pretty much any other asset classes that you buy is dependent on the government. If you buy bonds, that's obviously the case, right? It's government debt. If you buy stocks, you are under the regulation of the government. If you buy property, the government can also increase taxes. There's all kinds of governmental influences when you've got anything else. Even fiat currencies can go up and down in value, at least relative to other fiat currencies based on government action. If you buy Bitcoin, you've got something that's pretty much independent of governments, and that's the same for gold. So you're diversifying against a similar kind of risk. If the government is doing something that's not in the interest of the saver, then owning Bitcoin as well as owning gold protects you against this. Let's say Bitcoin was not to grow in the next 3 to 4 years. Let's say it stays at the current price where it is. It doesn't go up any further. Will then most people lose hope in Bitcoin? Will it then go down? There is, again, a pretty solid argument to be made here, because a lot of people that bought into Bitcoin bought into it with the expectation of very high returns. And there are a lot of long-term charts that plot Bitcoin on a long-term logarithmic scale that show a pretty relatively linear growth, right? Of course, at the beginning it was a bit steeper. Now it's curving down, but there's pretty much a constant growth despite all the crashes, right? The crashes then recover within a year or so. So there is a high expectation of returns. And so maybe some people that bought into Bitcoin didn't buy into it because they want to have an alternative to gold and they want to diversify their portfolio. Maybe they just bought in it for the upside because they think Bitcoin has more upside potential relative to, say, tech stocks or relative to property. Whatever it is, right? There's more upside, and when there's more upside, people buy into something. Especially given that the capitalistic system is so tough on people that just earn money with labor, because labor gets devalued over time. The salaries increase much slower than monetary expansion. Salaries only increase by roughly 4 to 5% per annum. The monetary expansion is by roughly 7% per annum. Stocks return 7, maybe more than 7% per annum. So we've got a system that's long-term benefiting the capital owners, not necessarily the people that sell labor. Thus, you do want to get ahead and you want to get as much capital as possible. Thus, you do want to take on more risk. And Bitcoin is seen as something more risky compared to other traditional asset classes.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com link is down below.
And so what would then happen if Bitcoin was just to go sideways for the next 3 to 4 years? If maybe that hope for increased returns is not fulfilled? Will Bitcoin suddenly crash down because people look for something new? I think the answer is in that last part. If there is something new that could potentially replace Bitcoin, and I'm not talking just about another cryptocurrency, if there's a completely new idea, like Bitcoin had been a completely new idea, if there's something that is an alternative investment that could potentially grow like Bitcoin did in the early days, then I do think many people might abandon Bitcoin and might jump onto this new thing. Now, it has to be something completely different, right? It cannot just be another tech stock or it cannot just be another cryptocurrency. It has to be an entirely new idea because that would only get people excited enough. And of course, it has to be small enough to give those multiple thousand X's of return. Will we see something like this in the next 3 to 4 years? I don't know, right? I don't have a crystal ball. I rather doubt it. I don't think something like Bitcoin comes along all the time, but we have to keep our eyes open, right? If there is suddenly something promising, we can't just ignore this. But let's work with the assumption that nothing new comes out, so that it's still just Bitcoin and all the other asset classes, that Bitcoin isn't growing for the next 3 to 4 years. What would happen? Would Bitcoin then crash because of all that short-term speculative money? I believe probably not. I believe most people will keep on holding. And that's simply based on the long-term on-chain statistics. When we look at the Bitcoin that hasn't moved for the last 5 years, we see that that's more than 50%. More than half of Bitcoin has not moved in the last 5 years. So more than half of the Bitcoin is the long-term allocation, is the diversifier across asset classes. It's an investor that might see Bitcoin to a degree as a gold alternative. It's not necessarily the short-term speculative money that tries to ride the waves. Of course, that money might partially go out, right? If we don't see any growth for such a long period of time, those kind of people might exit the market. But that then also means that the long-term investors will get a higher and higher share of the market. And as there's more and more Bitcoin held by the diamond hands, Bitcoin's supply, Bitcoin's liquid supply gets smaller and smaller. And so every additional increment of purchases will push up the price more. So that's actually healthy. What we usually see is that before a bull market starts, what we see is that the fraction of long-term holders relative to the short-term speculative money in Bitcoin is very, very high. But it's those kind of people that have most of the supply. When they own the price movements, then the price tends to rise over the long term. Because again, those people tend to dollar cost average into the market, right? They buy, but they don't sell. And why don't they sell? Because they're not interested in converting into anything like fiat. Because they simply just want to keep their purchasing power and maybe gain some purchasing power. They simply just want to hold all kinds of different assets in order to not lose from that monetary expansion, in order to not lose from the devaluation of fiat. The long-term investor only converts into fiat when they're spending. There's not necessarily conversion into fiat to time the market. It's much better to time the market by moving from one asset class to another asset class. By, for example, selling Bitcoin when Bitcoin is super high and then put this maybe to a down payment for a property. It's much better to navigate across those asset classes that don't depreciate over time than it is to convert into fiat. So don't take fiat as your measuring stick for your wealth, right? It's a bad measuring stick because it devalues 7% per annum. Use something else, right? Use the number of Bitcoin that you own or use the number of NASDAQs that you have, right? Just divide your US dollars that you have in your portfolio by the NASDAQ price. See how that's going up over time. Have something as a measuring stick that doesn't lose against fiat over time. Then you have a more realistic picture of where you're actually headed. So is Bitcoin a gold replacement? Partially. Is Bitcoin a tech stock replacement? partially. But in the end, I believe it's an asset class that continues to stay lowly correlated to everything else. And thus, it's probably right to have this simply as one of the many allocations next to all the other things that we own to protect against the tax that's called inflation. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. Feel free to also join our Telegram channel. There's a Telegram link down below. Looking forward to seeing you there. Cheers.